Hey, what's up? What's up, my friends? So, it's been a while. I know about 3 weeks, right? Because over the last few weeks, I have been swamped with commitments, right? And I just want to share with you two things for now, right? The first thing is recently we had the traders blueprint launch, okay? And a few of you actually came down for the event, and I'm really happy to meet you, right? Like Eric, Nizam, Yu Feng, and Javier, and a lot more, right? So I'm really grateful, right, for you all to come down, right, and show your support, and it's something that I really appreciate it, and I'm happy to meet you all individually, right? Finally, okay. So that's number one. Number two is that number of you are actually asking, right, how can you get your hands on the book, right? For those of you outside of Singapore, especially, what we plan to do is to have it uploaded to Amazon, right? So you can actually purchase directly from there through Amazon. Okay, so we are still in the midst of processing it, and when it's done, I'll update you via email or whatsoever, right? When it's available on Amazon. So that's number two. Well, I said two things, right? Okay, so there's another thing that I want to share. The third thing is this, right? Over the next few months, right, I'm going to ramp up my uh content on trading with Rayner. My plan is to every week, right? In fact, for the rest of the year, each and every week, I will be publishing a blog post content, and will be practical trading strategies and techniques that you can use, right? Some that are already in the pipeline are, candlestick patterns just released this week. Okay, then we're gonna have average true range, stochastic indicators, price action, a lot of content that is going to be published on a week-to-week basis, right? All to help you become a more profitable trader, right? So to expose you to the different ways you can trade the markets, right? Improve your trading knowledge, and hopefully, right, find an edge in the market so you can achieve the trading success, right, that you deserve, right? So all this is free, right? If you want to be updated whenever I publish a new post, right, just subscribe to my email list. It's completely free, right? I'll share with you later how to do it, right? But that's pretty much what I want to say, right? So those are the three things that I want to bring up today before we start today's video. So anyway, back to this week's video. It's the start of May. I am going to cover the different sectors in the financial markets, about 10 markets in total: FX, indices, bonds, and etc. So quite a mouthful, right? So with that said, I will see you there. So as I was saying, right, you can come down to my website, tradingwithrayner.com, right? And just scroll down, and let's say, for example, you download this ultimate guide to trend following, right? You will get a copy of this trading guide, plus you will be on my email list, so I can update you, right, when the new blog posts are being posted. They will be out every week, right? One blog post, right? So you will get updates on it almost immediately when I publish the post. Okay, so this is how you can do it, right? My website, tradingwithrayner.com, and then just download any of these guides, both, even if you want to. So moving on, back to this week's market analysis. The first pair that I want to look at is the euro dollar, right? We have quite a bit of move over the last few weeks. Okay, basically you had this somewhat of a descending triangle, market breakdown lower. Actually, I was long this one, right? From this price rejection of the lows. I took half when the market break and close below this previous candle low, right? And the remaining half got stopped out, right? As the market, if you just look briefly on the weekly time frame, right? I was anticipating a breakout higher, right? Because there was a potential bullish pennant or bullish flag forming, but it broke down. So anyway, the other half of the position got stopped out. So right now, from the looks of it, right, euro dollar, I'm bearish on this pair, okay, but I don't really have any trading setup on this, right? I would say what you had this week, the closest one that I spot is actually this one over here. If you look back, just pull out the 20 MA, you notice that this trend is relatively strong. So this one over here, we had a possible, if you're quick, you could have gotten a shot at the retest of the 20 MA. If not, right, this over here, I would say, is the most likely scenario where you could have traded the break of this lows over here, right? I missed this move, right? So I'm not in this trade, but if, on hindsight, right, if I had noticed it, right, I would say this would be the most likely course of action that I would have taken to short euro dollar towards the downside. So at this point, the market is, pretty much in the middle of nowhere, not showing any signs of reversal yet. So bias is still towards the downside. For pound dollar, it's pretty much similar as euro dollar, right? Pretty much also, break this area of support. This one as well, previous resistance turn support. So again, the bias is towards the downside. I don't see any signs of reversal yet. If for some of you might be thinking, so what is a sign of reversal? So there are different ways to classify it, but the earliest one, right, that I would say, right, is when the market break and close above the previous day high. Because if you look at it, right, since this false break over here, this highs, the market has not closed above the previous day high ever since, right? I think over the last couple of weeks. So if you ask me, right, if you want to go long, right, then at least wait for the market to break and close above the previous day high, and then maybe you can go down to the smaller time frame and look for a buy setup. But at this point in time, it has not happened yet, right? My bias is still towards the downside, right? Shorting towards the downside. Moving on, right, Aussie dollar, right? This one is a little bit more interesting. So you can see that, I clearly have said, right, if you don't want to be too quick to trade the reversal. So for Aussie dollar, this market has come into this area of support, okay? And I noticed that, it has been hovering over here, right? And the market has, closed higher pretty over the last couple of days. And if you go down to the 4-hour time frame, right, this is where you could see possibly, right, not confirmed, right, nothing is confirmed in trading, but, you can see that there is possibly forming a inverse head and shoulders pattern over here. This right shoulder is still forming up, right, can't really tell yet. You might have a trend line that looks something like this, right? So again, still too early to tell, but at least it's showing possible signs of a reversal here on the Aussie dollar. So what I'm looking for is that if the market can break out higher aggressively, okay, and does a weak pullback, right, small, those small bodied candles, right, looking somewhat like a bullish flag pattern, right, I'll be inclined to go long if the market can break above this highs, all right, in anticipation of higher prices. Okay, so again, right, I am not trying to predict the market is going to reverse. I would let it show me the way, right? Breakout first, does a pullback, and hey, I'll catch the move later on. All right, so this is Aussie dollar, a little bit different from the euro and the pound dollar. And moving on, another one is dollar Canadian. This one is looking pretty interesting. This market over here, strong move, right, towards the upside. Then over the last 5 or 6 days, maybe even longer, the market went into a volatility contraction, right? Notice the range of the candles somewhat, has shrank and is being contained in this range. So to be honest, right, I would say there is actually both direction you can trade. You can either go long or short. So if the market breaks above this highs, right, it's a valid long setup, right, as you are just simply trading this bullish momentum move. Alternatively, right, if you go down to the 4-hour time frame, notice that this market has did break above this area of resistance and is hovering above it right now. So I won't be surprised also if the market, hits lower, right, from a build up over here and then it breaks down. If that happens, right, I'll be inclined to short this market as well, right? So I am willing to go both long and short on dollar Canadian, depending on how the market structure unfolds, depending on how the price action unfolds itself. So it's like, kind of plan A, if this happens, I'll do this. Plan B, if this happens, I'll do that, right? So this is pretty much how I go about, structuring my trades, right? Identifying possible trading setups, right? And then I'm planning them accordingly. So this is for dollar Canadian, right? Definitely a market is worth looking for. Dollar against the Indian rupee is another one. So just scroll back, right? Notice that this market again is strong, right? Bullish momentum towards the upside, breaking above this area of resistance. You just scroll back, it's actually quite a significant level, right? Previous support. Let me just highlight that out, right? Previous support, against resistance, and bam, breakout. So what I'm looking for on this, right, is again very simple trend continuation patterns, right? If the market, right, from the looks of it, is forming somewhat of a symmetrical triangle. I'm not really too concerned with the exact pattern name. It could be a pennant, a flag, a triangle, whatever, right? But all you need to know, the key thing is that, when the market retraces, right, the range of the candles get tighter and tighter. That's what you want to see. So if the market, right, if it does break above these highs, I'll be inclined to go long, right, in anticipation of higher prices for the dollar against the Indian rupee. My stop loss would just be, 1 ATR from this swing low to give it some room to breathe. So dollar against the Indian rupee, right, bullish on this as well. Dollar against the Chinese yuan, right? So this one is quite interesting, right? Notice that this market, right, basically this is the area of resistance. We have a false break of this highs. Okay, so clearly, right, on Thursday it traded lower. On Friday had a slightly higher close. Okay, so I would say this is a valid setup to go long, right? Trading the false break of the highs, right? Because what does the false break means? It tells you that, traders who are long above these highs are now pretty much trapped as the market reverse 180 degrees against them. So where would they put their stop loss? Chances are, some maybe below the swing low here or even here. So as the market trades lower, right, it would, induce further selling pressure and keep the price. It would induce further selling pressure. So price could possibly, head down lower towards the downside. So I am short this one again, slightly against me at this point in time, right? But we'll see how this plays out. Again, right, whatever I trade, buy, sell, whatsoever, it's all for educational purposes. I am not responsible for any of your trades that you took, win or losses. So please be responsible, right? If you're not confident, you're not sure what you're doing, please stop trading, right? Because that is not responsible. Okay, so this is the dollar against the Chinese yuan, and on top of it, right, on the weekly time frame, you notice, right, it's possibly forming, somewhat of a continuation pattern, right? Possibly, right? If these highs holds, the market, let's say it could reverse down lower, right? Within this range, right? The market could continue towards the downside from here. So we'll see how this goes, right? So anyway, I got shot, not the exact highs, but somewhere around the highs, and I may get stopped out, right? We'll see how this one plays out. Okay, so that's for the Chinese yuan. Moving on, right? Let's have a look at the index, right? The S&P. So from the looks of it, right? Clearly, the long-term uptrend is still intact, right? Still towards the upside. If you can't see it, right, just use the 200 MA, right? You can see that the price is above it. So a very simple general rule that I've been sharing is that if the price is above the 200 MA, right, your bias is to stay long. If the price is below it, then hey, you can look to short. All right, so at this point in time, S&P is still above it. So my bias is still towards the long side. But in terms of trading setup, right, even though I have a bias, right, in terms of trading setup, I'm not seeing anything. Okay, price is in the middle of nowhere. So if you ask me, the best levels to short or long this market is at the extreme, right? The extreme highs or this, extreme swing low over here. In the middle, I'm not keen to do any business, right? So I'll just leave it, right? But if you can come up all the way up here, right, and maybe get a very strong price rejection, that could be a fair, counter trend trade towards the downside. Or if you have a very sudden swing down lower, then you get rejected, right? That would be another possible trade towards the upside, right? But right now, the price is in the middle of nowhere. I'm not interested to do any business. Moving on, right, let's have a look at the bond markets. The 10-year Treasury bond. Okay, so you can see that this market, clearly, the bond markets is in a downtrend, right? Series of, lower highs and lower lows. Very obvious. Now, the question is, clearly, your bias is towards the downside. So where, can you get an entry? So what I'm seeing over here is this market retested this previous swing low that could act as resistance, and on the 4-hour time frame, here's what I'm seeing, right? You can see a price rejection over here, right? What I'm looking for is for the market to head down lower. That's a very weak pullback, right? Someone looking like a bearish flag, and if you can break below this low, right, I'll be inclined to go short on the break of this lows, and then just reference my stop loss 1 ATR from this swing high, and then just trail it on the daily time frame and see how far the swing can go down lower, right? For example, this type of swing, I'm looking to catch this kind of swing on this daily time frame. So that's one technique that you can use, right? Combining both 4-hour and the daily time frame to capture the swing on this market. So this is the 10-year Treasury bond. Also, I would say possible bearish setup that could form up. Another one is the Brent crude oil. Okay, so this is a trade. I'm not sure if I shared it. I think I didn't share it because we didn't have a video over the last 3 weeks. But nonetheless, right, you can see this one over here. This market break above this area of resistance. This is a sign of strength, right? Bullish. So for those of you who missed this trade, hey, don't worry, right? You can always, always tell traders don't chase the market, right? The setup would present itself one way or another. Of course, you would then have, a few tricks up your sleeve. If you're the type of trader that, constantly wait for the market to come to, test support, test previous resistance, turn support, then hey, you might be disappointed because the market may not always, in fact, more often than not, it will not do that. You would have to expect something else, right? And in this case, right, what you could have gotten is a form of a pullback, right, and then a breakout higher, right? So you could have traded this bullish flag. Whether the market break above the highs, whether it breaks and close above the highs, those are all possible entries depending on which approach you're more comfortable with. Then you can just set your stop loss, reference it from below this swing low. So anyway, I traded this, I got long. The market's forming another possible bullish flag pattern, I do not know, right? But from the looks of it, it's still looking quite okay at this point in time. Okay, so this is the Brent crude oil, bullish as well. And last but not least, right, let's talk about Bitcoin. So Bitcoin, this one, right? So I guess it really is about knowing your levels, right? So for the S&P, similar story, right? Bitcoin right now is pretty much in the middle of nowhere. So if you're trading off the daily time frame, like this chart over here, okay, you pretty much have no business trading at this point in time yet. Of course, the lower time frames you can trade the micro structure on the lower time frame, that is fine. But for traders who are trading off the higher time frame, right, I would say, the best levels to look for on Bitcoin now is possibly the 12,000 level and this 6,000 level, around this area, right? Remember, these are all areas on your chart, not specific price levels. So what I'm looking for, right, is the market could rally higher, get rejected, right? That to me would be a very nice setup to go short on Bitcoin. Alternatively, if it swings down lower, gets rejected and closes higher, that would be a possible setup to go long on Bitcoin, right? But in the meantime, right, price is in the middle of nowhere. You don't have to force the trade, right? Look elsewhere. There are other trading opportunities out there. I've covered 10 markets today. I shared with you a few possible candidates to look for. Hey, don't force yourself. Don't force the trades. Look for something that meets your trading plan, right? And go for it, right? Staying on the sidelines is pretty much part and parcel of trading. No position is a position in and itself, right? Don't forget that. Okay, so with that said, I have come to the end of this week's market analysis. It feels good, right, to be back after 3 weeks, right? So if you have any questions, feedback, just let me know below and I'll answer them. And if you've enjoyed this video, hit the subscribe button below, right? I would appreciate it. With that said, I wish you all good luck and good trading. I'll talk to you soon.